What is up, my fellow viewers? In this video, I am going to be going over the Apple chart. Guys, I know you support Apple, probably watching this on your iPhone as we speak, but I believe we have a bearish pattern incoming, and that means prices to the downside, guys. So let's check it out. Remember, none of this is financial advice, guys. This is just my technical chart analysis for the ticker Apple. So here we are, guys. We are in the weekly chart in Apple, and we opened about 2% today. The market is up, doing well. Strong little rebound here, just as I thought we were going to have. Let's see if we can continue it. Trading at about 252. And you could see Apple is trading in this very reliable macro trend channel, guys. You could see every time we have touches, and this is in the weekly chart, guys. So this takes a long time to develop. So let's go to the daily now. And I will put on these drawings real quick. Okay, guys, so this is the pattern that I identified. It is a descending triangle, guys. And I will put on the heckin' Ashi to make it clear to you. You can see it smoothed it out a little bit, guys. And I also have this graphic here for you guys. So basically what a descending, this is not a typical descending triangle because usually we have a downward move at first and then it's a continuation of the downtrend, or the opposite, guys, for the uptrend. So basically we come down and it is selling pressure against support. So the support, you could see this line, if I extended it, we have support and resistance here, but it becomes a support when the stock's trading over it. We have support, but the selling pressure increases, guys. You could see creating lower highs, and this support is definitely locked in, and I believe this trend line for the top triangle is locked in. One more retouch would definitely confirm it, and you could see already, guys. Let me go back to the regular candles real quick, and you could already see that we found support again, and we gapped up to to go maybe hit this area again. But typically, guys, this pattern, as I stated in the graphic, it's usually a downtrend first, and then we have this consolidation, and then another continuation of the downtrend, guys. But when you spot patterns, so this is not a typical descending triangle, but when you spot patterns, it's not an excuse to blindly trade them, guys. You have to use your overall chart structure as well, and your indicators as well, all in conjunction. So that's why I think we're still going to have this downward breakout. That's not guaranteed, but I'll go over that later. But you could see this triangle. We're at the top of the trend channel here, guys. So there's more room to the downside than the upside. And what I like, not that I like, but I can compare it to Tesla would also experience a descending triangle. You could see here's the support line, clear touch points. And Tesla also has the support. You could see the support, and it's being compressed by the selling pressure, lower highs, lower highs, lower highs. And what happened? It gapped down, and now it may come back up to retest, and then that might, because it usually retests the support or resistance, guys, and then maybe back down. What my point is, this is also the same scenario. It did not have a downtrend at first, so it wouldn't be a continuation. This would be a reversal of a descending triangle. And guys, do not get this confused with a bullish symmetrical triangle. You could see that one here. I can make it a little more clear for you guys. Here we go. So a bullish symmetrical triangle is when you form higher lows and then lower highs, guys, after an uptrend. You could see that here. Uptrend, the consolidation, convergence, and then perfect retest, and then back off to the races, guys. And guys, I have a great structural pattern reference guide, guys, on my Patreon. And if you don't know my Patreon, my content, come check me out. Patreon.com/GainsKeeper Trading. I have 3 great tiers, guys, but if you want the full trading experience, I recommend the Master Keeper. We have tutorial vault trading systems that are good for beginners to advanced, guys. My tutorials vault designed to take you from a beginner and become an advanced trader eventually, guys. Low cap to large cap swing trades and breakout stocks, and then once per week, guys, we go beyond the charts and we focus on personal growth and personal awareness. So if you want to improve the quality of life, this is the place to be, guys. We're building a great community. Patreon.com/GainsKeeper Trading. All right, let's get back to the chart. Let's go back to Apple here, guys, and we'll put on the drawings. So just think of this line as the selling pressure is increasing, right? Which it is. And typically volume follows that, the volume will start to decrease, and eventually the selling pressure, the support can't hold it anymore, and it breaks out to the downside. That's so this is not, like I said, this is not a typical descending triangle. So there is a possibility there's a breakout to the upside, but I would watch this at this moment here, usually around like, 2/3 to 3/4 of the pattern. That's when it usually ends. And if you see a retest and then support, then you might break out to the upside, guys. But remember, do not trade these patterns blindly. Always use your market sentiment at the time and chart structure and indicators at the time, guys, too. So let's throw these final drawings on. Okay, and you could see, like I said before, we gapped up above the daily 200-day moving average, which is good, and found exact support on it. You could see that, retested it. So we're going to be probably on this way to close this gap. And even if you swing trade this, guys, it's for a large market cap, one of the strongest stocks in the market, almost $4 trillion market cap. You're getting 5% to, if you play this pattern out, 8% for the big boys who play the large capital. That's great, guys. And then you could short it the other way. Remember, not financial advice, but let's go over the scenarios. If we do have this breakout to the downside, you could see these orange lines here, multiple gaps, guys. I would expect a rebound in this mid support zone, about 220 to 233, guys. And that would only make sense to me because we have also Fibonacci retracement support. The 2618 is very strong. And you could see right on that line, we have reaction points, guys. So this area would be very strong for me, along with, let's see, Ichimoku cloud support at the bottom here and the trend channel bottom. Let me make this thicker for you guys so you can see it more visibly. I'm sorry, guys. I'm over here too. Okay. And by that time, maybe the weekly 200-day moving average catches up, because you could see we've never really traded under that. We've retested it once last year in that quick crash we had in April, but other than that, it's been smooth sailing with the weekly 200-day moving average. Okay, let's go back to the drawings. If we do have a real bearish market sentiment, guys, I expect the price to come back to the crash zone here, which I call it 164 to about 176. And as long as we keep a higher high from here, you could see, I'm sorry, a higher low. You could see where higher low maybe will come, maybe touch this, or maybe we touch our support reaction. And when I say support reaction, guys, you could see we have resistance here, exact touch points, support. Make it really indicate you can see it better. It's not really a defined zone, but when the market sentiment is right and, the RSI can be oversold, you could get a reaction off this support, but the main demand zone, bottom demand zone here, and the mid one is here. Okay, guys, if we do break out to the upside, the top supply zone where the main resistance is 277. Sorry, guys, I messed this up. 280. Excuse me, guys, 287. Sorry about that. And especially, we might break this top, touch the top of the trend channel, and that'll be the top sell for me, guys. So keep that in mind when you identify these patterns, guys. Don't get too confused. Make sure you know which one you're trading. On my Patreon, I go over them more in depth if you want to check that out. But remember, don't trade these patterns blind, guys. Use your chart structure, use your retracements, use your indicators, and then you can put together a solid trade, guys, even if you swing it just little by little and, compound those effects. All right, guys, have a good trading week.